Good morning, traders. It's Thursday and the market is humming under the surface. Yields are wobbling, the dollar is easing, gold is firm at all-time high, and sector rotation quietly steering risk. I'll break down the overnight pulse, what yesterday's tape actually told us, the macro levers that matter into the bell, and then 3 clean trade setups you can hit at the open. So then, traders, let's lock in. Firstly, overnight and futures pulse. Taking a look at our futures over here, S&P modestly green, Nasdaq a touch firmer, and the Dow is mixed but pretty much flat. And lastly, the Russell also sitting pretty much flat. Taking a look at the Asia to Europe handoff, tech and healthcare are steady, cyclical, selective, energy still two-sided. Dollar and rates. The dollar softer at the edges, 10-year yield hovering, still the metronome for risk. Commodities, gold still firm, hedge flows intact, and crude is choppy. So our tape recap. Yesterday, what it tells us traders. Firstly, buyers defended pullbacks in semis and quality growth. Dips were bought near obvious levels. Then, defensives. Staples and healthcare provided a reliable floor when growth paused. Energy materials lagged. Consumer was split. Strong brands held. Weak margins sank. Volume was decent but not euphoric. Accumulation not mania. So our lesson essentially, the tape is still rewarding structure and confirmation, not just chasing. Okay, traders, we're going to go on to our macro levers next. As you can see all over the news today, still talking about gold, currently at all-time high. So, what were our macro levers? Why today could move? Well, rates are a referee. A 10-year drift lower gives air to growth and semis. A pop pushes flows into defensives and cash flow names. There are inflation undercurrents. Services, wages, imports remain sticky. Any hot whisper can jerk flows. Intraday traders. Positioning reality, funds lean long, cash light, moves can extend an air pocket quickly, risk discipline matters. Lastly, traders, cross assets, softer dollar helps multinationals, gold's firmness says hedging remains, crude indecision keeps energy tactical. So then going on to our rotation map, where flows want to go. So AI, semis and equipment. Leadership is rotating beneath the surface. Chip equipment and connectivity have been getting attention when headline AI cools. Consumer, essentials and premium brands continue to draw steady bids. Weak discretionary remains fragile. Healthcare, quiet leadership on wobbles. Pricing power plus pipelines equals stability. Financials, yield sensitive, range bound unless the curve moves. And breath tell, if small and mid caps join early, trend odds rise. If not, expect rotation or chop. Alright traders, 3 actionable trade setups going into the open on Thursday. Our first is Applied Materials, ticket symbol AMAT, and this is our chip equipment catch up. So why, you ask? Well, when AI enthusiasm rotates beyond the marquee chip names, equipment often becomes the cleaner expression. AMAT rides wafer fab capex and data center buildouts. Therefore, traders action if AMAT opens green and holds the first push. No immediate fade. Take it long for a momentum ride. Bonus if a semi ETF also firm. Then scale out. Trim into the first $1.50 to $2.50 push. Keep a runner only if semi-trend and futures hold, and out fast if AMAT flips red or the semi-group softens. Flatten, no passengers traders. Okay traders, secondly, let's take a look at SBUX today. Ticker symbol SBUX, and this is our consumer brand rebid. Why? Well, discretionary is split, but global brand plus ticket resiliency gives SBUX a steady bid when the consumer tape stabilizes. Action, buy a steady green open while consumer retail ETFs are positive. Aim for a grind up rather than a dip. Scale out, take 0.75 cents to $1.50 clips into strength. Let a small runner work if XLY stays firm. and get out fast if SBUX StarBucks loses VWAP and retail rolls. Step aside, fast traders. Alright, last one, Eli Lilly, ticker symbol LLY. Something we've taken a look at before, and this is our healthcare anchor with growth. Why? Well, healthcare has been quiet leadership. LLY adds a growth kicker, pipeline plus pricing power to defensive's ballasts. Action long on a green open with XLV confirming. Add on a calm higher low reclaim if we dip, then stabilize and scale out, trim into $2 to $3 moves. Keep a runner if healthcare breadth is positive, and get out fast if XLV fades or LLY loses its early structure. Cut and reassess traders. Okay then, traders, our execution filters. Futures versus VWAP. First ES NQ VWAP test is the truth. Hold to press winners, fail to tighten risk. Breath by 10 a.m. Eastern Time. Wide participation means trend. Odds up. Narrow equals rotational chop. Trade smaller and quicker traders. Liquidity magnets opening range high-low. First 5 to 15 minutes and yesterday's high-low and pre-market extremes. Volume is greater than opinion always. If volume doesn't show up, treat every move as guilty until proven innocent, traders. Let's wrap it up. Yields call the tune, gold keeps the seatbelt buckled, and rotation is selective. AMAT for chip equipment momentum, SBUX for consumer brand stability, and LLY for healthcare anchor with upside. Trade confirmation, not hope. Trim into strength, honor exits. I'll see you at the bell. Let's execute. All the best, traders. Thanks for joining the video. I'll see you tomorrow before the bell. Take care.